Welcome everyone to another episode of Let's Talk Special Economic Zones. I'm your host Ainsley Brown. I am the Senior Director with responsibility for regulations, policy, monitoring, and enforcement at Jamaica Special Economic Zone Authority. In today's episode, we're going to cover the role of governance and investor attraction and investor retention. Now, governance, it may seem, like a bit of an odd thing. Why is that important? Investors don't really care about that, but they actually do. And they're showing that they care more and more about it these days. And in essence, governance is exactly how is the zone regime functioning? How does it work? And what that cuts right down to is about transparency and accountability and the absence of corruption. With those things, you will find that zones and governments will succeed in their zone programs. Singapore is a perfect example of that type of success. That governance actually is, in essence, a form of currency. It's a magnet that attracted investment because investors want to know that their investments are secure. Now they're taking risks, and they appreciate and understand that they know that the business may fail or may succeed, and that may be beyond for reasons beyond their control, but they're willing and able to take the risk and have raised the capital to invest in another country within a special economic zone. So that has to be appreciated and that has to be respected. And governance is a clear signal to the market, clear signal to the to the investors that a government is serious. And here are the rules. They're known, understood, understandable, and they're followed, right? So transparency and accountability are critical factors in terms of governance and in terms of just zone success. Now, how exactly would zones or a zone program or a zone authority express this? Firstly, the law, right? The law that enables a zone to exist, the authority to exist, and their regulations and rules and procedures, all of those have to be above board, have to be known, have to be published, and also have to be followed. So governance becomes a critical tool. In addition, oftentimes, depending on the model a country uses, a zone could be fully self-contained, like a Dubai. Their zones basically are fully self-contained, basically self-governed, self-run by the government, of course. Or they're a model like Jamaica, whereby the zone program fits within the wider construct. The supreme law in Jamaica, of course, is our constitution. But you still have to follow labor laws, for example. And this is where zones in the past have developed a poor reputation as being, sweatshops, or there's a race to the bottom. But zones, in fact, if properly structured within their governance framework, of course, can be a race to the top and can be used for structural transformation to not just upgrade individual zones or zones within a country, but can be used to upgrade a country itself. Singapore, a perfect example. Shenzhen in China, a sleepy fishing village, about what, say 35 years ago, now is, the shining example of what well-run special economic zone can deliver for a country within a good governance framework, which was transparent to all involved, in foreign investors, local workers, the whole special economic zone community that participate in there. So governance cannot be overemphasized as an important part of how a zone or a zone program success in attracting and retaining, because you may attract the investor, the incentives, whether fiscal, financial, or otherwise, are very attractive, but then if a country, if I sorry, I shouldn't say country, if a company finds it difficult to operate in a country, they're going to leave. It's simple as that. It's a basic matter of economics. If they can't do what they want to do in terms of lawfully, that of course, what they set out to do, that is run their business in the country, then they will leave, and we don't want that. So you have to structure from how the zone authority is set up, whether it has a board, which minister it reports to, whatever the structure is within the individual countries. It becomes of vital importance that that structure be known, be understood, recourse to the courts, or a special tribunal, or arbitration, whatever it is, that also has to be known, so that there's a certain degree of comfort that the investor has, that their disputes can be settled in an impartial way, whether the disputes with the zone authority, or with a supplier, or with another member or company within a zone, or someone from outside. They could have had a dispute with that, but they want to know that they will be treated fairly. It's not about special treatment, it's about being treated fairly. So if people are treated in an open, honest, transparent, and accountable way, you'll tend to find or attract the better or best investments. Those are the types of investments and investors that a country wants in their country as part of their zone program. So governance, as I said, keep emphasizing, is in fact a great currency, a magnet to attract and retain investments. So if you like this episode, what I had to say today, please like, share, and leave a comment. I would love to hear from you, and also for future ideas for future episodes. Bye for now.